We just had a delay of another Bitcoin spot ETF application, and this is going to pump altcoins like you will not believe. And in this video, I'm going to tell you exactly what altcoins are going to pump the hardest. But this is just leading up to the inevitable approval of the Bitcoin spot ETF. And through this remarkable, crazy, witty turn of events, yes, Wall Street is at war with the SEC, not with guns and knives, but with wit and $1,000 an hour lawyers. The Wall Street and institutions just put the SEC in checkmate, and I'm about to tell you guys exactly what happened. If that sounds good to you guys, if you're excited for this, this is one of the most interesting stories that I've researched in a very long time. I'm excited to tell you about it. So like the video. If you're new to the channel, subscribe if you're not already. What's up? My name is Kyle Chasse. I've been in crypto for 12 years, bringing you guys everything that I'm learning on a daily basis so you can capitalize and make the most out of this upcoming insane super cycle in crypto. All right, let's dig into it. So, as you can see, the SEC delays decision on Hashdex Bitcoin spot ETF application, Grayscale Ether's futures filing. So you can see here, the U.S. Securities and Exchange Commission is delaying a decision on an application by Hashdex to convert its existing Bitcoin futures exchange traded fund into a spot vehicle. The agency also delayed action on Grayscale's attempt to launch a new futures-based ETHE ETF, Ethereum ETF. This is the one that is a crazy game of chess that we're about to talk about. So you would have expected for, this is just the actual note from the SEC saying that they're going to extend the decision-making process out a bit further. I think they have like another 90 days now to make a decision or something like that. But here's where we're going to get it. Before we're going to go into, how the delay will pump altcoins, I'm going to tell you about this crazy thing here that's going on with Grayscale and the SEC and this crazy, tricky maneuver that they've pulled that will put the SEC in checkmate, that will inevitably lead to forcing their hand at approving this ETF that we've all been waiting for. So let's get into this. It was quite difficult for me to understand, guys. I had to go into a lot of reading. I actually went through the court case. You can see here, I've got these 91 pages open and went through it to actually understand what's going on here. But I will break it down for you guys so you don't have to do that. Nice, right? Update. Grayscale's Ethereum futures 19B4 filing was delayed. Nothing remotely surprising about this. They've also separately, also filed separately to convert ETHE into an ETF. This is not so relevant to the story today, but this is where it gets really interesting. So James Seyfarth, who's the Bloomberg analyst for ETFs, says, I was initially unsure why they Grayscale, would even file for this, talking about this 19B4 futures ETF. But my thoughts have evolved over the last few weeks, and they're basically this. Grayscale is playing chess, not checkers here. They're likely hoping to force the SEC into issuing a 19B4 decision on an ETH futures ETF, likely setting this up similar to the way that winning Grayscale's lawsuit heavily used the Ethereum ETFs and Hashdex 19B4 ruling to point out the SEC's hypocrisy on deciding between futures and spot. All current ETH futures ETFs were not approved under this process, and we have no SEC decision process to fall back on if the SEC denies spot ETH ETFs in 2024. A 19B4 futures ETF approval letter would set things up for another battle in court that would likely be virtual replay of the Grayscale's court case that they recently won. So we talked about this before, right? So Grayscale sued the SEC because they wanted to convert the Grayscale BTC Trust into a spot ETF for Bitcoin. Now, this sounds very complicated right now, and I'm going to break it down for you, right? So there's different ways that these products can get approved, or different paths that they can take on registering under different acts, basically the 1933's Act or the Securities Act of 1940. So Nate says, if SEC denies this, Grayscale could theoretically file another lawsuit stating the SEC treating Bitcoin and Ethereum futures ETFs differently by allowing 1933 Act for one and not the other, potentially an APA violation, which would be not good for the SEC. This would be something that actually would be very, very bad for the SEC. So it's the sole reason for filing the 19B4 for an ETH futures ETF, meaning that this game of chess. I doubt Grayscale even intends to launch this. It's nothing but a Trojan horse to get a 19B4 order from the SEC and watch them try to either approve and argue why this is different from spot, or deny and argue why 1933 Act products are meaningful different from 1940 Act products. Both are bad for the SEC, in my opinion. Genius move, in my opinion. So now what does this all mean? This is where, okay, so this is going to be the important thing to understand here. So to understand the efforts to launch a spot Bitcoin ETF, one must first understand how ETFs get to market. Most ETFs are registered under the Investment Company Act of 1940. These 1940 Act ETFs have a fairly simple pathway to approval. Issuers file an application with the SEC, and the filing automatically goes effective after 75 days unless the SEC blocks it. So let me clarify this for a second. So all of the futures ETFs, and to be clear, if you understand, the futures ETFs are essentially futures. They're derivatives of the underlying assets traded in fiat. So people are betting on the future price of Bitcoin or Ethereum, lower or higher, but they're betting in dollars, not in Bitcoin. And the underlying exchange that's trading these products doesn't have to hold Bitcoin or Ethereum. And so it doesn't have any effect, no matter how big the volume is or how bullish people are. If they're trading futures, it's not affecting the underlying asset because they don't have to buy it and trade it. They're just trading dollars. So it has no benefit to us who are holding Bitcoin and Ethereum and want the markets to pump. So spot Bitcoin ETFs, however, like all spot commodity ETFs, are filed under the Securities Act of 1933. The key features of the 1933 Act structure is that filings do not automatically go effective after 75 days. Instead, the SEC must affirmatively approve a 1933 Act filing before it can launch, which typically takes about 240 days. How does the 1933 Act review process work? The 1933 Act review process follows a specific timeline. First, the ETF issuers file a prospectus with the SEC describing the fund it wants to launch. Then the exchange where the ETF will trade, such as in the New York Stock Exchange, files a 19B4. A 19B4 filing is a petition the SEC to allow ETFs to list and trade on the exchange. Up to 15 days after the 19B4 is submitted to the SEC, the filing is published to the Federal Register, the U.S. government's official record of government actions. From that moment, the SEC has up to 240 days to approve or reject it. It's worth noting that a filing's progression from one stage to another does not imply that is increased likelihood of approval or denial. Therefore, when the SEC extends its review, it should not be read as a positive or negative light. It's just part of the process. The SEC has historically extended the review deadlines for spot Bitcoin ETF applications up to or close to the full 240-day period, but there is no guarantee that will be the case in the future. So, what are we talking about here? So traditionally, what has happened is that the ETFs for the futures have been filed under the, let's call it the easy path, which is this 1933 Act here. And this is a very easy path. So the 1940 Act, the futures have. So the 1940s don't have to do the 19B4, they don't have to go this whole lengthy process like the 1933 Act. So here's a difference. So it is a sole reason for filing the 19B4 for an ETH futures ETF. So never before has anyone gone this path using the 1940s Act. Is that right? The 1933 Act. Yeah, so no one has gone before using the 1933 Act in order to go through the ETH futures or any futures ETF. So what they're doing, going this route, is putting them in a position where, and watch them try to either approve and argue why it's different from spot, And so if they approve it, the 19B4, remember the 19B4 process is exactly what spot Bitcoin ETF is trying to do right now, and what has been either denied in the future or delayed. So what they're saying here, and remember that the Grayscale court hearing that the SEC was called arbitrary and capricious for lacking logic because they were trying to argue that there wasn't a market of significant size, and the court said there was, and also the pricing mechanism was the same for a futures ETF as it is for spot ETF. They use the same underlying asset to price the commodity or the futures, the futures contracts. They're priced by the underlying asset, so they're exactly identically the same. And so the argument that the SEC lost in court applies here. So when they say that, and watch them try to either approve and argue, and from why it's different from spot. So if they approve this Grayscale Ethereum future under this act and approve a 19B4, then they have to go try to argue why they would approve the ETH futures, but not the spot Bitcoin ETF. And it comes back to the exact same court case, which we know they can't argue that because the court already ruled that out. Or the other option the SEC has is to deny and argue why the 1933 Act products are meaningfully different than a 1940 Act product. Both are bad for the SEC. Genius move. So we know that this first path is not going to happen, right? So either they're going to approve it, and if they do approve it, they're going to say, hey, you approved the ETH futures ETF with a 19B4, which is exactly what needs to be done for Bitcoin spot ETF to be approved. And since you did that, you have to approve the Bitcoin spot ETF, right? Because the court already said that the spot and futures are identically the same. So let's go, and now this is the last part. So the last part was, or deny and argue why the 1933 Act products are meaningfully different than 1940 Act products. So I went through this whole thing right here and read all this over here, talking about the specific part, while the 1940s Act, and it's just like 1933. The most important part to understand is that the 1940s Act does not establish any more investor protections that would protect them from a spot product. So in this document, when they talk about the sponsor, this is BlackRock. And so it says, additionally, the sponsor believes that the distinction between the 1940 Act and the 1933 Act and the surveillance sharing available for the CME ETH future markets versus the spot ETH markets are not meaningful in the context of ETH-based ETF and ETP proposals, and that such reasoning cannot be a basis for the commission treating ETH futures ETF differently from spot ETH ETPs like the trust. The sponsor believes that the commission's approval for ETH futures and ETFs means it must also approve spot ETH ETPs like the trust. Yeah. So they can't argue that these are any different, guys. Exactly the same. So there you have it. So this is the genius checkmate that they made to put them in place. So this is going to be very interesting to see how it unfolds. But this move essentially just solidified the fact that we will have a Bitcoin spot ETF, and it's going to likely happen by January 10th, 2024, guys, which is like 55 days away. With that being said, you would have expected the Bitcoin price to dump right here where it pumped was when the delay came in. But everybody had expected that if the delays happened, that the market would lose faith and we would have continued to crash down, but we didn't. We went up after that. And yes, we had a complete correction today. However, that's just the market correcting, and that's just people still being in disbelief and taking profits. But this is the part that you need to pay attention to, this pump after it, which it gave people more reason to believe that they were underexposed and that we still had 55 days of upward bound market trajectory. So there's going to be a lot of people who want to make sure that they're in proper position, and especially now that we know that the ETF will be approved. So I expect the markets to continue to rally over the coming 55 days to something pretty remarkable. And you can see here, guys, you know, that we have been, ever since we got the news, which I think was, I don't know, I don't remember where it was, but the Bitcoin, oh, it's back here even further. Yeah, here. This is where we got the news of the BlackRock filing for the ETF. And then we've got pretty much up only since then. And so it's going to continue to do that, guys, because people know that once this thing is approved, it's going to skyrocket. And I am under the impression and belief that when we get the approval, we know that when we get the stamp of approval, it's probably going to take another month or 2 months before the actual product starts trading on exchanges. Now, I believe that from the approval dates until the day it starts trading, we're going to see crazy volatility, but mostly up only. And up until the approval, there's a lot of people sitting on the sidelines right now that don't believe it. They're not paying attention like you and I are. And they're just sitting there and they're going like, this is never going to happen. Institutions are done. Bitcoin's a joke. It's never going to go to $100,000. Trust me, a lot of the world is like that. But you know better, right? We know better. So we're going to have continue bullish momentum moving forward all the way to January 10th. And then if we get the approval before that or on that date, that's going to be another huge press up. And then we might get some correction afterwards a little bit. And then it's going to continue to go up all the way until the date that it's traded. And when the date that it's traded, I believe that we'll have a big correction on that date. And then that's fine. Wait for the market to pull back 20, 30%, buy in, pump up further. So now we're going to go in and I'm going to show you guys which products have the most likelihood to pump in the coming days. And also some of these have nice pullbacks. We have some nice entries right now. So now look at this. So now if you go like this and look at the chart, it looks crazy, right? Normally you would say, hey, never buy this kind of up only green chart, you know, especially if you look at the daily, look at that. It's insane, right? But if you zoom out a little bit, you realize that it's just the beginning, right? And this is for Solana. And most people I've talked to think that Solana is going to vastly outperform previous all-time highs, right? So we're at 62 right now, and it's going to, all-time highs are 259. So that's still, what is that? You have like a 4.5x from here, right? And then it's going to probably go even higher. So, and the altcoins I'm showing you today, guys, have been something that have been strongly correlated to Bitcoin's market movements. So these things have pumped pretty much the hardest. And everything I'm going to talk about today is fairly blue chip. And the reason I'm talking about blue chips is because we know how money transitions through these ecosystems. So first, it starts with Bitcoin. Bitcoin starts to pump. Then the money rotates into Ethereum and blue chip altcoins. And then it rotates into mid cap, and then it rotates into small caps. And the small caps are where you're going to make the majority of your money. So a good idea might be put money in the things that are going to pump the most. Bitcoin and the altcoins I'm about to tell you about. When they have good pumps, 2, 3x, when you make 2 or 3x on your money, start taking your profits out and putting them in the more degen, more risky things that we're talking about. At least that's what I will be doing. Not financial advice. Not telling you guys to do anything. This is just what I will be doing. So Solana will pump incredibly hard. We have Injective, which has a nice pullback, guys. Injective has a nice pullback. And again, when you look at it, it seems like it's an up-only chart. But like, if we know that this thing is gonna pump really, really hard, like let's go to the daily and look at it on a zoomed out perspective. Load. Is that as far as I go about that? Okay, what else we got? Well, that loads. We got Rune, which has just been crazy on a crazy run up. But again, let's zoom out and look at Rune. Look at it. It just keeps going. Look at this. So it's just getting started here, guys. Just getting started. Look, it's just a little. So when you're zoomed in, it looks absolutely insane. But this is just the beginning of the bull run, right? It's probably going to come back, smash all-time highs up here, which is a 3x from here, and then probably go even much higher. And I don't think it's going to take very long to get there either, right? Most of these blue chips will probably go much higher than their old all-time highs. Let's see, did Injective load? Yeah, I guess Injective was newer, so we'll see how that turns out. But you have Avax, which has also been on an absolute rampage. But a nice pullback, finally a nice pullback here, guys. Like opportunity to kind of get in if you've been FOMOing here. You have a nice pullback right now. It's probably going to bounce back down to like maybe right around $20, $21, right? Something like that, and then boom, back on its other leg up. Again, zooming out. Let's go to the daily. Look at this, right? It's just still nothing. Just a little baby. Just a little baby starting to take off here, guys. Look at this. Insane, right? Wait, what are we? 21 bucks from 146. Still 7x to go to all-time highs. Bonk, I talked about the other day. Again, this is more risky. This is definitely not blue chip. And it's newer, so it was launched in the bear market. Or maybe was it not? Was it launched in the bull market? Let's see. This was when? No. Launched beginning of the year, came back down, and was dead for a while, and now it's picking back up again. So crazy volume on this thing, guys. Like $55 million of volume every day. I would not go heavy into that, but maybe a small bag. Rollbit, which you guys know I've been incredibly bullish on. Here's a good opportunity. You have here. These are why we like pullbacks, guys. Right before we're about to get into a huge Christmas pump. So you have a 21% pullback on Rollbit. I like that. So, and then Kaspa, guys. Let me know in the comments below if you want me to do a video on Kaspa. I just started diving into it today. This thing seems incredibly interesting. And actually, guys, I found something else today. Just discovered it that reminds me of Kaspa. This thing launched, just in May. But it's like $2.2 billion market cap and just been up only for this thing. But the point I was showing you is all of these things. And this is one other thing. So tomorrow, Binance Futures will list Kaspa. And so I'm hoping, because I don't own any Kaspa yet, I'm hoping that in the futures that people will short this and that it comes crashing down and we get a nice price correction, because if you look at the 4-hour chart, it's still basically up only since it started to take off fairly recently. Where are we? Basically from here, up 200% basically here. So I'm hoping that with the Binance listing the futures, that maybe has a nice correction. But let me know, guys, in the comments below if you want me to do a deep dive on Kaspa. It's pretty fascinating. And today I found what I believe to be the next Kaspa. I'm going to do some more digging, and as soon as I feel confident, I'm going to let you guys know. That's going to be it for today, guys. Thank you so much. I'll catch you tomorrow. Bye-bye.